we turn this morning, we'll get a read on the energy market from midstream player Crestwood Equity. The company has had a rough run since the oil drop-off. In fact, stock's down more than 80% just over the last 2 years. The CEO, Robert Phillips, will join us next.
Crude oil's dramatic fall over the last 2 years took a heavy toll on some producers as well as midstream players who stand between producers and oil consumers. We're joined now by Bob Phillips, the chairman and CEO of Crestwood Equity Partners, a midstream energy company operating in North Dakota's Bakken and other regions around the country. So many things I want to ask you about. The first thing I want to know is this. Has volume declined, and by how much, coming out of Bakken right now?
You know, Steve, the Bakken has declined a little bit due largely to the slowdown in drilling. We have many fewer rigs active in the region right now, but I might say that the technology improvement we're seeing from the producer segment is nothing short of amazing. They're keeping volumes relatively flat up there in North Dakota. I think we're actually under 1 million barrels a day from a peak of about 1.5 million barrels a day a couple of years ago.
So that's what's extraordinary.
So volumes have declined, for sure.
But that's what's so extraordinary about this recent decline in oil prices, a big decline in oil prices. And you just said volumes are down only a little bit. Is there more to come, or have they found a way in Bakken to make money and continue producing at these levels?
Well, most of our producers on our pipeline systems and producers that store in our facilities and use our crude by rail facilities are continuing to make a profit at current price levels. Now, there's a significant amount of the Bakken in North Dakota that probably is not economic at current prices. And certainly if we saw an increase in prices, that would bring back an increase in drilling activity and probably more volumes to the market. But we've been amazed at how well the volumes have held in, given largely to the technical improvements in drilling and completion.
So is it right to say that you as a midstream company, you're not so price sensitive as much as you are volume sensitive?
Well, that's right, Steve. Our business is largely a fee-for-service business. The majority of our contracts in our storage and transportation segment, which the Bakken assets fall into, are what we call take-or-pay contracts. Oftentimes we get paid for utilization of the facility regardless of the actual volume that goes through. And as a result, our cash flows have been reasonably stable through this downturn.
So you beat on revenues, but you missed pretty badly on earnings. What happened there?
Well, earnings, as you know, Steve, we're a master limited partnership, and most of the midstream companies out there are structured as a publicly traded partnership. So the real measure that we look at for performance is earnings before interest, taxes, and depreciation, or EBITDA. Cash flow, if you will, is an easier term. We don't really look at earnings because during this downturn with stock prices falling, correlating to oil and gas prices over the last couple of years, there's been significant write-offs in goodwill and depreciation, and as a result, bottom line earnings have been lower than we expect, but cash flow is the real measure of performance in our industry.
Bob, I want to give you just a very quick couple seconds here to talk about this new deal you have with Con Edison, which seems like a different kind of structure for the industry.
Steve, it is, but it was on the leading edge, and we've seen many of our competitors, including the larger guys like Kinder, follow the same model of selling part of their best asset to their best customer in their best growth region, and that's exactly the strategy that we followed with Con Ed. I know it has a lot of local interest there with your viewers. Con Ed is a great partner. They own 50% of our Northeast storage and transportation assets, which connect the Marcellus shale supplies with the growing Northeast natural gas markets. I couldn't have picked a better partner. They have a regulatory feel for the market up there. They certainly understand the needs of utilities and power plants and the growing need for natural gas.
Okay. Bob, thanks very much for joining us today. Interesting stuff.
Thank you, Steve.